Hello and Assalamualaikum to everyone, and especially to our beloved Madam, Dr. Nohazila binti Ismail. Before we proceed, let me introduce myself. My name is Aina Azliana binti Muhammad Deni. So, in this video, we will talk about the development and framework of takaful industry in Malaysia and Saudi Arabia. Did you know what is takaful? Takaful is one of the insurance concepts based on Islamic muamalat, which is based on Sharia law. Basically, the takaful system is based on concept of cooperation, responsibility, guarantee, protection and mutual assistance amongst its participants.
The overview is an aspect of performance which is the takaful industry expanded further in tandem with the growth in the domestic economy. All the key indicators of the industry showed the positive growth. For instance, combined family and general takaful net contribution income increased by 10.8% to 1.1 billion, and market penetration of the takaful industry rose to 5.1% from 4.5%. Takaful operation in Saudi Arabia has leading the development of takaful among Arab nations. Other than that, the largest takaful market in the world is Saudi Cooperative, also known as a takaful market. The overview in aspect of takaful industry in Saudi Arabia is Saudi Arabia's Islamic financial service sector has experienced remarkable growth over the years, and as a result, the government is today regarded as one of the pioneers of Islamic banking.
Until 2010, BNM has gone through three phases that have contributed significantly to the success of the takaful industry. The first phase was a first 10 year in which first takaful is introduced. In October 1982, a special task force was established to study the viability of the establishment of the Islamic insurance companies. 2 years later, Syarikat Takaful Malaysia Sdn Bhd was established and the Takaful Act of 1984 was gazetted. STMB, Syarikat Takaful Malaysia Berhad, also started operation in early stage, and Bank Negara Malaysia was given the responsibility for the management and supervision of the insurance and takaful industry in May 1988. Subsequently, Takaful Malaysia moved into the second phase, the establishment of ASEAN Takaful Group in 1995 and the establishment of ASEAN Retakaful International Limited in 1997. In October 1993, a second takaful operator was established in Malaysia after Syarikat Takaful Malaysia Berhad. The company was established because of a joint venture between Malaysian National Insurance Berhad (MNI) and the Malaysian Islamic Economic Development Foundation (YAPEM). 2 years later, the ASEAN Takaful Group was established, and in 1997, a National Sharia Advisory Council of Malaysian Banking and Takaful were appointed. End of this phase, MNI Takaful Sdn Bhd was changed to Takaful National Sdn Bhd, and the name remaining until it was purchased by Maybank. The third phase from 2001 to 2010 began with Malaysian Institute of Islamic Banking and Finance was established, and the Financial Sector Master Plan in Malaysia was also launched. To further encourage the development of takaful industry in 2002, the Malaysian Takaful Association (PTM) and Association of Takaful Operator was established. They aim to improve industry self-regulation through uniformity of market practice and encourage high level of cooperation among takaful operator to expand the takaful industry. There are milestones and the early establishment of takaful in Malaysia until it's developed. Next, we turn to the takaful in Saudi Arabia. Saudi Arabia started with the active part of Jeddah, and rapidly growing export and import industry were the main trigger of insurance penetration in the Kingdom of Saudi Arabia by foreign agents and branches in 1950s. 2 decades later, in 1974, the Red Sea Company became a first local insurance firm to enter the market, followed by United Saudi for insurance. The entry of this insurance company was to meet the greater need for insurance in an economy, and it was driven by rising oil price. In 1977, the Standing Committee issued the fatwa that became a game changer for industry, as it did not allow conventional insurance and allow cooperative insurance to operate under tabarruk contract. As a result of this fatwa, in 1986, the cooperative insurance company Tauniyah became the first national insurance company licensed in the government, operating in accordance with the principle of cooperative insurance. With that, more development was noticed for the family takaful business by early 2000, which led to more growth for the product by 2002, especially in the Middle East.
According to the Malaysian Takaful Association, the local family takaful sector grew more quickly as Malaysians became more familiar with the takaful concept. The value of new takaful protection increased by 14.5% annually to 324.2 billion ringgit in 2018, up from 2.4% annually from the year before. From 4.35 billion ringgit in 2017, the overall family takaful new business contribution increased by 13.1% to 4.91 billion ringgit in 2018. With 4.96 million certificates of business in force, up 4.6% from 4.74 million in 2017, the overall family takaful business in force contribution increased 11.8% year-over-year to 4.86 billion ringgit in 2018. The general takaful business, on the other hand, saw a respectable 8.9% growth, with gross contributions coming in at 2.79 billion ringgit, up from 2.56 billion ringgit in 2017. With a portfolio composition of 62.3%, motor takaful continued to be the largest business class, followed by fire at 20.1% and the other classes at 17.2%. Despite the paced liberalization of motor and fire tariff having impact on the motor takaful sector, motor takaful made a gross contribution of 1.74 billion ringgit in 2018, up 14.6% from 1.52 billion ringgit in 2017, according to MTA. Despite the difficulties brought on by the COVID-19 pandemic, the Malaysian takaful sector saw significant growth in the family takaful and general takaful industries in the first half of 2021 compared to the same period in 2020. The overall contributions from family-owned takaful firm climbed by 46.7% in the first half of 2021 from 3.19 billion ringgit to 4.68 billion ringgit, while the motor takaful business sector kept the highest market share with a share of 62.5% from 1.64 billion ringgit in the first half of 2020. The overall contribution from the general takaful business increased by 13.6% from the period to 1.86 billion ringgit. The takaful insurance market in the Gulf Cooperation Council has thus far in 2020 been largely resilient despite the fact that deteriorating economic conditions have already resulted in multiple negative rating actions on sovereigns, corporates and banks in the region. This is primarily due to a decline in claims during the first half of the year because the government imposed travel restrictions. As a result, several insurers may need to review their business plans and dramatically increase their capital reserve. The industry has benefited from lucrative results leading up to 2020, and the majority of S&P rated insurers began the year with relatively substantial capital buffers, which helped them to withstand the initial shock when equities markets in the area plumped by more than 20% in March-April. These claims led to a significant increase in industry earnings in the first half of 2020. Only in Saudi Arabia, where the sector accounts for about 85% of the region's total GWP, is the industry expected to grow by up to 5% in 2020 and 2021. This growth will primarily be fueled by the implementation of mandatory medical coverage for pilgrims, a new inherent insurance defects IDI for properties, and adjustment to policies relating to the motor leasing business.
Next, Sharia framework and governance. Sharia framework and governance in Malaysia. Malaysia have a highly distinct regulation comprised of a combined jurisdiction and judicial system, specifically common law and Sharia. Islamic law, on the other hand, is only applied in Sharia courts and apply only on the family problems and inheritance law. The Sharia panel is referred to the Sharia supervisory by the IDE. Meanwhile, the BAFIA is referring to as a Sharia advisory group by releasing the BNM GPS1. Most Sharia court meet of IFS and takaful operan recognized as the Sharia court meet SC. The main goal of the Sharia framework is to set forth BNM's expectations of the Sharia governance structures, procedures and positioning to the guarantee that all its operational and financial undertakings are Sharia compliant. Proactive approach is one of the Malaysian government regulators appreciate this concept. The proponent of this paradigm believes that the regulatory based on approach will help to enhance the Sharia government shape. Sharia government shape in Malaysia, the Central Banks of Malaysia has released the BNM GPS1, which controlled by the Governments of Islamic Financial Institution SC. Objective extents of the application formations of the SC, membership limits, duties and obligations of the SC and Islamic financial institution, reporting structure, effective dates and secretariat of the SAC are all included in the text. Sharia governance and framework for the Saudi Arabia. Saudi Arabia has evolved a Sharia governance framework SGF for Islamic financial institution. The SGF, which took place in July 2020. The SGF highlights is to commit roles and major tasks in the accomplishment of the Sharia governance inside of IFS. According to the structure, the board is responsible to the proper accomplishment of the Sharia governance well with IFS and ensuring that all actions stick to the Sharia principles and requirements. Passive approach concept is unique to Saudi Arabia Sharia governing approach. The Saudi Authority Monetary Agency SAMA considered that IFS the same as the traditional one. SAMA has yet to establish Islamic financial laws and Sharia governance frameworks rules for the Sharia governments in Saudi Arabia, because there is a gaps in the legislative framework governing Islamic finance in Saudi Arabia. The starting point of the Sharia governing structure differs from the others country. The idea of establishing the Sharia governance shape within IFS is a voluntary effort and indirect effect from the market rather than judicial and regulative obligation. The Sharia Advisory Board is supported by the three major particular organs: its Secretariat, Sharia Control Department, and the Control and Information Unit.
Etiqa is a prominent digital insurer or takaful player in Malaysia as well, with a market share of more than 55% for online premiums and contribution for 3 years running. Moreover, Etiqa also a major participant in Malaysian bancassurance. As can be seen in Malaysia, Etiqa consists of 4 principal operational companies, and for personal coverage there are 10 coverage, while for business there are 5 coverage. Tawunia is the first national insurance firm authorized to do all insurance operations in the Kingdom of Saudi Arabia, in accordance with the cooperative insurance philosophy recognized by Islamic Sharia. Tawunia also the first license in the insurance industry under the Cooperative Insurance Company Control Law, has earned a license number from the Saudi Central Bank, which is SAMA.
Next, the line of services product offered by the selected takaful operators from both countries in Saudi Arabia, which is Tawunia, and Malaysia, which is Etiqa Takaful. There are 7 products in both countries, such as Etiqa Takaful in Malaysia is education, health, motor takaful, home, life and family, savings, as well as personal assistance. Meanwhile, product in Tawunia Takaful in Saudi Arabia is Virgin Pilgrims, health, motor insurance, home, life and family, visitors, as well as travel. For Malaysia, Ethical Takaful product firstly is education, which is Madani Takaful. There are 2 products that appear under health, such as e-medical pass takaful as well as e-cancer takaful. Third is about motor takaful. Motor takaful get covered with Sharia compliant plan. For home, which is under housework, and household takaful is about you will get 15% rebates when you apply online and have a cash back when you make no claims. Life and family have 2 products such as I Secure Takaful as well as Mawaddah 2 Takaful. Saving or Harmony Takaful is a protection plan with flexible savings plan. Takaful Body PA as well as Takaful Private Car Driver and Passenger is under personal accident product. Other than that, Virgin Pilgrims are Saudi Arabia Tawunia Takaful product. It has divided into 2, like Umrah insurance program as well as Hajj insurance program. Next is Medical Malpractice Insurance Program, which is health. It protects persons practicing the medical profession from the risks associated with their work. Motor insurance, which is car, get covered with comprehensive car insurance, which is Al Shamil, Sanad, Sanad Plus, and Motoflex, as well as Tawunia Drive. For home, which is under house owner and householder insurance, is a program duly approved by the Sharia Committee. Next is life and family, which is my family insurance. Other than that is visitors, which is visitor insurance program, and lastly is travels. COVID-19 travel insurance for citizens and international travel insurance programs.
Next topic is about the issues and challenges in takaful industry. In Malaysia, Etiqa is one of the best and leading insurance and takaful companies in ASEAN. It offers a wide selection of products including life insurance and general insurance, as well as family takaful and general takaful products. However, despite its success, there are several direct and indirect issues that arise in the implementation of Etiqa takaful. Firstly, an issue of basic takaful does not cover payment for critical illness compensation. This is because some people think that they are already covered for everything after registering for takaful. It becomes a challenge when many people do not understand and do not make medical card additions, but think that all the benefits they still receive. Next, the issues of the complicated takaful claims process. Insurance is often said to be difficult to declare or make a claim. It should be understood that the claim process takes some time due to the many documents that takaful agent needs to include. Other than that, challenges such as lack of exposure about takaful among the community, lack of registered takaful operators, and the lack of expert in interpreting the best plans to attract registered consumer in takaful are also obstacles for the takaful system to continue to grow in Malaysia. Next, we move to the issues and challenges in Saudi Arabia. Despite the remarkable growth in the takaful industry in Arab over the past 2 decades, actually, the takaful has high competition with conventional insurance. In total, there are about 21% of the insurance firm in Arab, which 6% are takaful firm and 15% are conventional insurance firms. This shows that conventional insurance is more accepted by the community due to the fact that conventional insurance companies experience greater returns than their Islamic counterparts. So, we have seen many different and overviews of takaful from 2 different countries. Both have their own advantages and disadvantages. So, that's all from us. Thank you for watching.